I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a reoccurring guest here. He's just brilliant. I talked to him a few weeks ago about this funding crisis with the Fed in the repo market, overnight money that banks need. And he came on and he talked to me and said, if it goes on a few days, it's fine. But if it goes on longer, it could be a much bigger problem. He's an expert in derivatives, expert in gold. He's a macroeconomic analyst. He runs KirbyAnalytics.com. Rob Kirby, thanks for joining us today on USAWatchdog.com.
Wonderful to be with you again, Greg.
Good to be here. I just wanted to flesh out your resume a little bit. You, in the early days of your career, were on the cutting edge of derivatives. There's not much you don't know about derivatives, repos, funding. Everybody sees you as a gold guy, but really you are a bond, a repo, a derivative. I mean, you know all about this stuff. So that's why I called you first when they were starting to have these, first few days of this shakings in the repo market, and you were like, yeah, this has happened before. I've seen this. But anyway, I wanted to get on to, it looks like they're reporting, and I don't know if you can believe reporting. It looks like they have the repo market, under control. Yet Martin Armstrong says, oh no, this is going to continue. We're going to have dollar, going higher. We're going to have dollar shortages and liquidity shortages and things like that. I want to kind of get your take on what's going on in the repo market, in the dollar market. What's going on?
Well, Greg, firstly, I want to say that my understanding and my belief as to what's behind this requirement for liquidity, my own personal take on it has been evolving very quickly over the past 8 or 10 days as I've read more into what's actually occurring. And where my head is at the moment, it's that this is all related to oil. And if you had asked me 3 or 4 days ago, I would have said it's probably related to something in the junk bond market as it relates to Ford motor company debt, but I've moved on from that, and I now believe that everything's tied to oil, because after all, the U.S. dollar is referred to as the petrodollar, and it would make sense that any disruption in the material fabric of the dollar world would be tied to oil. And when you look into what's behind the dollar, and particularly in light of what's happened to American oil production relative to the rest of the world, and what the rest of the world has been doing with their oil, things have come into focus in the last 24 hours for me, very, very clearly as to what's likely going on. And I before this interview, Greg, I sent you a headline, and
Wharton Business School.
Yeah, it's from the Wharton Business School, and it's dated. Okay, and it's this has sort of come up in my proddings in the last sort of 24 hours, and while dated, this Wharton School piece it's dated in late September of 2018. And the headline was a speculation that could the next financial crisis be born out of the oil fracking, I'm going to say debacle. And the reason I say the oil fracking debacle is that an inordinate amount of money has been rolled into developing all these basins where oil is fracked through the continental United States. An inordinate amount of money has been spent there, and nobody's making money fracking oil. Okay, so and yet the amount of dollars being spent there are unprecedented. Like unprecedented amounts of money are being spent, and every barrel of oil that's being produced in the Permian and then in the fracking and the shale oil, every barrel of oil that's being produced at a loss. And people that will tell you that they now have ways to frack oil cheap, they're lying to you, because the results are there. Like nobody's making money, okay, and nobody's making money fracking natural gas either. And I mean, if we take the major natural gas fracking fields in America. We've got the Marcellus, the Barnett, the Fayetteville, and the Haynesville as four major gas fracking fields. And like, to give you the break evens on what the natural gas price needs for these guys to make a penny. In Marcellus, they need $3.16 to break even. In Barnett, they need $4.03 per million BTU to break even. In Fayetteville, they need $3.60 per million BTU to break even. And in Haynesville, they need $3.26 per unit to make money. Well, the current price of natural gas is $2.40. So they're all underwater. They're all losing money on every incremental unit of natural gas that they produce. But I guess they're going to make it up on volume. And, so I start thinking to myself, and really have examined in my own head, why is this occurring? This has been going on now for a number of years, where losses are being sustained, and despite losses, there continues to be more and more and more money plugged into this area. And it's almost like somebody has a secret stash of money and can afford to sustain losses almost indefinitely, or so it would appear. So then I think about, okay, well, so America is producing an awful lot of energy, but they're not making money doing it. What is it that would make them want to do that? And that's when I start thinking about the rest of the world, or as somebody famously said, the rest of the story. And the rest of the story goes something like this. Venezuela used to sell all of their crude oil for dollars. And Russia used to sell all of their crude oil for dollars. And Iran used to sell all of their crude oil for dollars. And Iraq used to sell all of their crude oil for dollars. And up until very recently, Saudi Arabia sold all their crude oil for dollars, but I believe they are now selling some of their oil for other than dollars. So we have many millions of barrels of oil that were formerly transacted in dollars, and these barrels are now being priced in other currencies. But the dollars in the world that formerly bought that oil are now basically, we're looking for a home, and they didn't have a home. So America had to create a home for those dollars, which is why America has ramped up their crude oil production from a low point in the 2004 to 2008 time period of bottoming under 4 million barrels a day. America is now producing 12.5 million barrels of oil a day, making them the world's largest producer of crude oil, surpassing Saudi Arabia. And these barrels that America's producing are all being sold for dollars. And these are the displaced dollars that formerly were being used to buy Iranian, Venezuelan, Russian oil. And something had to be created, or a place, a home for those dollars. Let's just say that the dollars that were left over when Venezuela, Russia, and Iran stopped selling for dollars, they created a spill on the floor, and they needed a sponge to soak them up. That's why American crude oil has gone up dramatically, and that's why it's forecasted to continue to grow, even though they're taking losses on every incremental barrel they're producing, because global dollar rejection is why America had to ramp up oil production to begin with. And global dollar rejection is accelerating. So, and this is not going to stop. So America's going to need to continue to produce more and more and more dollars to soak up more and more oil priced in dollars that America will produce at a loss. And how that's being funded, you might want to check in with Catherine Austin Fitts and Dr. Mark Skidmore as to how that could be financed, because we've got the U.S. Treasury with an adjunct called the Exchange Stabilization Fund, where they've salted away very likely $21 trillion in black market money.
At least.
Yeah, and this money is being used to finance basically the salvation or the maintenance fund to keep the dollar relevant. And you see, creating all this extra oil and pricing it in dollars makes the dollar look strong because it's soaking up the excess dollars. But the fact of the matter is, nobody that's producing these incremental barrels is earning a penny. In fact, they're all hemorrhaging cash. And the fact that all these dollars are going into something that's hemorrhaging cash and losing money is the real reason why there's been no inflation. Because all these excess unwanted dollars are financing losing operations. If these dollars were going into anything that made money, the returns would be being invested and would be causing observable inflation. But the opposite is occurring, and the dollars are disappearing. The same way that the US military can spend $7 trillion over the past 15 years blowing crap up in the sand, and we don't experience any inflation, even though $7 trillion has been directed into the military industrial complex. And people say, well, all this money's being spent and there's no inflation. Well, you're right, because all we have is pockmarks in the sand. The money's gone, okay? But the money was created and the money's gone. Same thing with the fracking business. The energy is being created, being priced in dollars, but there's no profits. There's no profits to cause deleterious effects of inflation, and the money just disappears basically into a black hole. But what it does is it allows the stewards of the world reserve currency, the US dollar, to live to fight another day. And that's what they're doing. And that's what's motivating them. And this is what the deep state is really all about, because these people are absolutely maniacally devoted to maintenance of the dollar standard. And the dollar standard is going to die because foreigners are rejecting dollars at too fast a rate, and you can only fund these white elephants, these industries that never make money, like a fraud that's that in your face, it grows long in the tooth before you know it. And we're starting to see the effects of this, because this is only accelerating the isolation of America, and it's accelerating rejection of the dollar. And there will come a day when foreigners will collectively say, no more dollars in trade. The day's coming.
You told a story about Robert Rubin, who was a former Treasury Secretary, and he's quoted as saying, "We do stupid things." Would you just to give some context to what they're doing? I mean, because my question to you in the pre-interview was, what's the end game? Are they going to have a new dollar? Are they going to have a new thing? But let's start there with Robert Rubin, because that was an excellent explanation of what's going on.
Well, I mean, in Robert Rubin's autobiography, he speaks of the Mexican financial crisis in the late 1990s, and in referencing that crisis, he explains that sometimes we in Treasury make very, very bad decisions, but these bad decisions are more than warranted if they help delay a collapse for 6 or 9 months. So all he was doing, it was sort of a glimpse of candor in how the motivation in the Treasury really works when they're faced with a crisis. If they can buy time, if they can buy a little bit of time, then it's any cost is worthwhile. And I mean, this is coming directly from the horse's mouth. This is Rubin in crisis mode and explaining the way they rationalize and think. kicking the can down the road for 6 or 9 months is justification for making horrifically horrible decisions.
They did the Mexican debt crisis. They had to fund them 20 billion or something. And
Yeah.
it's just like all of a sudden Shazam that went away. But you say there's a reason why they were doing that. Why were they doing that? Why did they just
Well,
let them, collapse? Why didn't they just let that go down?
well, because that crisis, basically was followed in short order by the long-term capital crisis,
Yeah, yeah.
and the long-term capital crisis at the root of that one was the notion that Italy had leased a bunch of gold and invested the proceeds with long-term capital. And then when Italy leased the gold left the Italian vaults, it got sold into the market, and the proceeds were invested with long-term capital. So when long-term capital went bust because they made a huge leverage bet on Russian bonds, and then Russia defaulted on the bonds, if this had been worked out publicly, we would have known that Italy financially didn't qualify for the euro. And if Italy didn't qualify for the euro, I would argue strongly that the euro would have been stillborn, and there wouldn't have been a euro. And if there hadn't been a euro, then the globalist wet dream of one world government would have had a serious wrench thrown in its spokes. And that wasn't going to be allowed to happen under any circumstances by the globalist dirtbags who run the likes of the IMF, the World Bank. And that's why the workout of long-term capital had to be done in super secrecy, and why they had to enlist their Mr. Fix-It, James Rickards, to do a secretive workout of long-term capital. And when the long-term capital workout was done, it was none other than Bear Stearns that caught wind and was aware that there was an issue with gold and Italy. And this is the reason why everyone had to take a haircut and why it all had to be done in super secrecy. And Bear Stearns was very upset that they were being made to pay basically because of somebody's, I'm going to say, illicit conduct with gold. Okay. And they squawked, and they squawked at the table. Bear Stearns squawked at the table, and they dared to speak up and speak out against what was being done. And sure enough, we know what happened to Bear Stearns in the financial crisis in 2007. Bear Stearns was chosen to be the fall guy because they had mortgage-backed paper rated AAA that failed. Let me tell you something about that, because while Bear Stearns absolutely had that paper on their books and in hedge funds contained within the organization, they were absolutely no different than Goldman Sachs, Merrill Lynch, Morgan Stanley, and Shearson Lehman, okay? Because they were all loaded with the stuff too. But Bear Stearns was not a team player. And Bear Stearns squawked the last time there was a problem. And that's why Bear Stearns was chosen for extermination. And they were exterminated, okay? Because there was going to be no passage was going to be given to them, because they bitched. They bitched when they saw something wrong, those years ago.
Well, I want to segue right into the end game, because the end game on that little episode back in the 07-08 financial crisis was people got the people that squawked got exterminated. How does this end with the producing of oil? There's a limit to how much oil that the United States can produce. Even though I'm glad we're energy independent, we don't really have to fight foreign wars in the Middle East, but that's not going to stop them from fighting them. But how does this end? I mean, what is the end game? Have they just put this off, and for what reason?
Well, it goes back to the Robert Rubin thinkology. They want to buy time, but ultimately, where this ends is complete dollar rejection, and very likely a global conflict, which I hope and pray isn't nuclear. But, being a realist, I think that the likelihood of this occurring, the odds of it occurring that way are growing every day, because the powers that be are very committed to jamming the dollar down the world's throat, come hell or high water, and the water's getting pretty high.
Does Trump? Is a lot of people talk about? I've had Wayne Jett on and other people saying they're gonna shut the Fed down. The Fed's going to kill itself, or they're going to shut it down, or they're going to have a new global currency, or we're going to have a reset of debt. And I have people on. I just had Egon von Greyer's on, who likes you a lot, incidentally. And he said, we reset the debt, you reset the assets. I mean, this is going to be painful, but it's going to happen. I mean, all this is going to happen. So, are we going to? Is the president? I know you don't know him. I know you don't have any inside people, but you're a smart guy and you can analyze things like this oil thing, which I think is brilliant. Which, hey, folks, you're getting this for the first time right here from Rob Kirby. But are we going to have a reset, a dollar reset, a new dollar, what do you think is going to happen short of nuclear war?
The dollar cannot, because it's not fit to be the world's reserve currency any longer. And this will become in time abundantly clear to everybody. I mean, Greg, the movement away from the dollar is well underway. And this is why America continues to scramble to produce more oil every day, despite the fact that they can't make a nickel on any barrel they produce. So you got to ask yourself, and I guess so how long can that go on? I guess maybe until they use up their secret squirrel fund of 21 trillion that Dr. Skidmore and Catherine Fitz have identified and documented.
And we don't get inflation because they lose money and the money goes poof.
That's right. I mean, you see, in the real world, Greg, when you can't make money at something, you cease and desist. But in our dystopic world, where the dollar is king, where the dollar appears strong, wild turkeys are funded as long as they allow, in Robert Rubin-esque terms, as long as they allow or delay the collapse for another 6 or 9 months, all's good. And we continue marching to our own tune.
And so the dollar shortage is really, we have an abundance of dollars, but the dollar shortage, let me make sure I understand this. So the dollar shortage, there's no real dollar shortage. They're pumping dollars out like crazy, but they're going into oil and and who knows what else they're going into, but they're going into these non-profitable ventures, and poof, they get blown up. And then we do have a dollar shortage because they're burning the dollars to keep the dollar viable and make it look like it's being used to buy oil.
Greg, if I dig a hole deep enough, and if you produce money like the world has never seen money produced, and if we throw it all into the hole and throw dirt on it, there will be a shortage of dollars. Okay? So we have a shortage of dollars. But there's
because they're burning the excess dollars into these non-profitable entities, and who knows if they're not bailing out Ford Credit. That's another thing that you came up with was, I wonder if there's who knows? This could be multifaceted. I mean, everybody, and I'm glad you're on because you think it's a big deal, and so do I. Ford Credit gets downgraded by Moody's, and I know S&P and Fitch still have them as investment grade, but they get downgraded by Moody's, and everybody in the investment world is, Ford's downgraded.
No, this is a big event. It's a big event in the credit markets, and it'll become a much bigger event very, very quickly if either Fitch or S&P were to downgrade Ford to non-investment grade as well.
I mean, you brought up how big of a deal this is in Peloton. The stationary bicycle wanted $1 billion in their IPO, and yet Ford is way bigger than that.
Well, Ford has over $157 billion in debt outstanding.
Oh boy.
Yeah.
What could go wrong?
Peloton.
Yeah, but everybody's worried about Peloton. I mean,
yeah.
the news is Peloton's IPO. They got the CEO, and why don't they have the CEO of Ford on and saying, "Hey, whoa, this is Ford Motor Company. This is a global company. You guys are producing real stuff, not stupid stationary bicycle, with a beautiful ad campaign where they're up in high-rise buildings with dark and lights around, and they want $1 billion for that.
Yeah, it's Hollywood.
But Ford makes something. They make the F-150 pickup truck. Hello?
Yeah. But Greg, listen, the prospects for Ford going forward are not really unlike the rest of the auto industry around the world. Automobiles sales around the world have not been robust. They've been very, very poor and lagging for quite some time. German automakers, Volkswagen and Mercedes, are having difficulties. Japanese automakers are having difficulties. The auto industry globally is terrible. It's just not doing well. And a large part of that is the way cars are marketed to young people these days. Like when I was growing up in my teens, ownership of a car was a symbol of freedom and sort of a coming of age thing. And owning a car these days is somewhat frowned upon because, hey, it increases your carbon footprint, and why own a car when you can just take an Uber?
Ridiculous. I can't figure out why General Motors is, the UAW at General Motors is going on strike. Do you not read the headlines? Do you not know that your competitors' bonds have been downgraded by a huge trading company? And I wonder if the Democrat leaders in the union, a lot of the people below the union leaders were voting for Trump. And so I wonder if they're doing this to try to kibosh, the economy going into the 2020 election when they know they don't have a strong hand to, making, $65 an hour, and they don't pay much of their benefits. And I think General Motors gave $8,500 in profit sharing last year to people. I don't get that.
It's great. It's the same. Look, Greg, it's the same thing. Producing natural gas, at over $3 per million BTU when the price is $2.40. And it's like producing crude oil and losing, 10, 20, $30 a barrel, depending on where you're producing it from. But despite losing on every barrel, it's like, the old ridiculous cliche saying, well, but we're going to make it up on volume. And when you see that occurring, you know that there's something more to the story. Okay.
Yeah.
And the something more to the story in this case, the reason the barrels are being produced in America at a loss is because those barrels are sold in dollars. And because there are too many dollars in the world, America needs to, effectively America is a hamster on a wheel. And they have to run harder and harder and harder, but they're not going anywhere. They're still on the wheel. And if they don't run faster, then the true condition of there being too many dollars in the world, the dollars start coming home, and they create inflation, which becomes unmanageable very quickly because most people can't wrap their heads around how many dollars there are in the world. So you have to make them look scarce artificially, and if that means having every rat on the planet running on a wheel, that's what the powers that be, the globalists, will do. Because they have contempt for us. They have contempt for humanity. And these people, and without getting into a political diatribe, I don't believe that President Trump is informed. I do not believe the people around him would dare inform him with the truth because they would be afraid of what he might do in reaction. So information is being withheld from the president, and he has a bunch of treasonous dirtbags basically surrounding him. And that doesn't speak well for the situation going forward either. America's not in a good spot right now, nor is the world by extension.
Trump is to blame the Federal Reserve for raising these rates, 7 times in 2 years when they raised them twice in 8 years for Obama with all the, QE and Operation Twist and all that junk. He's now saying that if he's impeached, the markets will crash and it will be the Democrats' fault. I mean, could we get a reset, a market crash? I've had a lot of people tell me this, and on one side I see, wow, the economy's pretty well. Home sales just had a good number, and on the other side they got 12,000 store closings before the end of the year. So I'm having a hard time figuring out which way is this squirrel going to jump? What do you think about the handicapping a reset or a crash this year or in the election year?
I don't see many bright lights on the horizon. And I think where we're headed is a pretty dark place.
Wow.
Because realities will catch up to what has most assuredly been happening. This game of deception is going to catch up with the perpetrators. And producing unending amounts of oil at with negative returns. It's sort of like saying, how long can you bleed? Well, I guess you can bleed until you have no more blood. And I would suggest to you what's going on in financial parlance in America. America's hemorrhaging dollars. And the only reason they can afford to hemorrhage dollars is because they've got 21 trillion of them squirreled away, basically at their disposal anytime they want to employ them. But if you hemorrhage long enough, you can even burn through a pile of cash that big.
Rob Kirby, thanks for coming on and giving us your analysis on the dollar glut of dollars being burned into the oil and natural gas industry and how we have an artificial shortage of dollars when in fact there are many dollars and they're trying to burn them up as fast as they can. I mean, that's what's going on.
They have no choice, Greg.
Rob Kirby, you have a subscription service. I think it's $145 a year. It's been that way for 10 years. Talk about no inflation. I think it's been. Go ahead.
KirbyAnalytics.com, Greg.
KirbyAnalytics.com, $145 a year. You also will email directly to your clients and your subscribers.
Yeah, I try to interface as much as I can with my subscribers. So if they have questions, I do my best to answer them all.
Just to let people know, too, that what you just came up with this dollar, producing dollars at a loss to soak up all these excess dollars, this is the first, folks. Rob Kirby came on here and put. I suspect you'll write an article about it, too.
Yeah, I'm going to write about it and post it, Greg.
But wow, I mean, that is some piece of. I always say you know the truth when you hear it, and I just got hit with the truth, and this was some piece of analysis that makes a lot of sense.
Well, it's the way I see it, and it's Greg, it evolves and it evolves over time, and it's there are times when lights go off in your head, and it's sort of like looking at a puzzle, and you can't put it all together, and then a light goes off, and the pieces just snap into place. Well, and that's believe we're encountering right now.
This makes a whole lot of sense when you lay it out analytically the way you did. Of course, you are a macro analyst, a macroeconomic analyst. So I'm getting it right. Nobody else calls themselves that, but you are, and I know you are a macroeconomic analyst, and you're expert in gold and silver. Before we get off, because people are going to say, well, ask him about gold and silver. And so before we get off, let me ask you about gold and silver. What are your sources saying about gold and about the price?
Greg, in the real world, Greg, gold is in short supply. Physical gold is in short supply. Physical silver is in short supply. But that has no bearing on what happens in the paper markets because regulators in America absolutely refuse to regulate. You see, we have laws on the books, commodities law on the books, that state that regulators should not be allowing the circus that's occurring in the paper markets in precious metals to occur. But when you have regulators that don't regulate, these fraudulent markets are allowed to assign any value they want to these strategic commodities which are very dear and very scarce, and they've been priced misappropriately, not appropriately. They're falsely being priced, and this will continue until we have a regulatory regime in America that regulates. And until that happens, owning some physical precious metal makes sense, because if you don't own physical precious metal, the day regulation starts again, you will miss, the train will have left the station and you won't get any.
Well, you deal in tonnage. You don't deal in coins. You deal in tonnage, and at some point, aren't they just going to have a hard time sourcing the tonnage in the real world for the price that they're saying?
Greg, they already are, and in certain circumstances, premiums are being paid for physical bullion. Premiums over spot are being paid. Not in every deal, not in every case, but there are premiums being paid. Okay, and it's a hit and miss in terms of where or when. It depends on who the owner is, and how desperate the prospective purchaser deems the beneficial owner to be, who may or may not be debating whether they're going to sell. So there's a number of things that go into it, but let's just say precious metal is a lot more scarce than the paper price. For instance, today the price of silver has been shellacked out of thin air for no reason, and the only reason that can occur is because American regulators don't regulate. That's another part of the reason why America is facing isolation in the world, Greg, because the rest of the world knows that American regulators don't regulate. And that bothers them, because they're settling their global trade accounts in dollars. And as per the missing 21 trillion, when questions are put to the stewards of the American dollar as to how many dollars there are in existence, and they say, we're not going to tell you. And and by the way, did we also not tell you that we're introducing a new piece of legislation called FASB 56, which means we don't have to keep financial books, but continue using our dollars and continue settling your international trade accounts in dollars, but don't mind us because we don't have accounting, and we're not going to tell you how many dollars there are.
Yeah. It's
But have a nice day.
And that's why the horizon. I mean, this could go. Maybe they last for a year. Maybe it falls out of bed in a week. I mean, you don't know. I tell people to get ready and stay ready because it's so tenuous. It's so crazy. I mean, what they're doing is so absolutely. And this is, what you said sounds crazy, but when you lay out, they're losing money here, they're losing money here, they have to produce this stuff. Why are they producing all this stuff at a loss to soak up dollars? And then it sounds crazy, but then when you see the analysis, it's not crazy, but it's crazy.
No, it actually makes sense.
Yeah, it makes sense, but it's nuts for them to be doing this.
Well, it's only reflective of how far down the rabbit hole we've gone. And listen, when you look at the actions of the Democrats yesterday and their pronouncements about Trump being complicit with Ukrainian politicos in rigging an election,
when it was the Democrats doing the rigging with CrowdStrike and the Ukrainian companies and all that.
Rest my case. So, it's upside down. But everything is upside down, Greg. Everything in the financial world is upside down. Everything in the geopolitical landscape is upside down. And typically, whenever someone, like when officialdom tells you there aren't enough dollars, the reality is there are too many dollars. And the reality should be, where are the dollars coming from and what are they doing with them? But, because that's reality. So when they say the dollar's strong, the reality is the dollar should be acting weak, because it is ultimately going to be dispensed with as the world's reserve currency. So everything is the opposite as to what we've, and everything the Democrats, I mean, you know when a Democrat's lying because you see their lips moving. Everything they say, the opposite is true.
Rob Kirby, we'll leave it there. Rob Kirby, Kirby Analytics. I'll put the links up to the website and to your subscription page. Rob, thank you for coming on and breaking this fantastic, a very interesting piece of analysis on the dollar and oil and natural gas, and them basically soaking up U.S. dollars in this industry. Rob Kirby, thank you for joining us today on USAWatchdog.com.
Been my pleasure, Greg.